Hi, let's talk about The9 company that together with the subsidiaries operates as an internet company in China, and the company primarily focuses on developing cryptocurrency mining business. It also operates and develops proprietary or licensed games, primarily mobile games and TV games. The company was formerly known as GameNow.net and changed its name to the current in February 2004. It was incorporated in 1999, headquartered in Shanghai. The PE ratio is very low, 1, and yeah, it's below the US market, which is 19.9, and they become profitable this year. So full information should not consider as investment advice. The debt is not well covering by operating cash flow, highly volatile share price, because yeah, as you can see, they went pretty fast up, and as fast they go down, and yeah, shareholders have been substantially diluted in the past year, makes less than 1 million in revenue, and also two risks. Negative shareholder equity does not have meaningful yeah, the large one-off item impacting financial results also is here, but the latest like share price. So currently we see that there's a downtrend from the mid-February. They announced the M&A, and there was a private placement that made stock down. Market performance, 1 year return still on the positive side, even they had this drop. So 1 year return 58%, beats the industry, beats the market, but it's a long-term price volatility considers higher than the average market and the industry. But quick reminder, 5-year return minus 79%. So this is actually one of the things that you should include investing long-term in one stock. So always define like your strategy, your risk-taking abilities. If this drop allows you to invest, so go ahead, but the better to buy, for example, the industry, which shows like not so bad dynamic as 1 year return 47%, not so much less than the company. 3-year return 76%, 5 years 143 compared to minus 80. Valuation side, yeah, so this is actually very low PE. I think they have pretty high stock price target currently. MarketWatch, for example, has stock price target over 600. Currently, I think if we look at the frame, so 1 year return, 5-year return, and the max. So yeah, actually they had back in 2007 over $1,000 were in there per share, but those who invested then, they're like minus 99%. So it's always better to buy some of the low-cost funds and not thinking and not like, because I think humans are not likely used to this kind of, if you're not professional, of course. If you're like me, small investor, it's better to invest in the fund, low-cost fund. And yeah, future growth for the media is here. Media industry 37%, past performance of the company 52%, annual earning growth. Yeah, they had pretty like seasonal dynamics, so they went pretty on the negative earnings, but there's still the dynamics shows that they are growing, and not actually the growing, but the earnings are going up, but the revenue is going down. So that is, I think that is because they are selling, for example, some of them, the assets that they have. So if they, that's one of the risks that is included here. So what it said, yeah, actually it's large one-off item impacting financial results. So it's a pretty tricky because the revenue is the dynamic of the revenue is going down, decreasing, and the earnings are increasing. So mostly I think they are selling some of the assets they have on the balance of the company. Financial health, so this is pretty bad dynamic of the equity, which had pretty seriously down in 2020, and yeah, luckily they increased that, but still they have negative shareholder equity, and good for them, they decreased the depth. Yeah, I think they had I think that this drop was from selling the assets and also printing shares out. So simple safe dividends will show us shares outstanding situation. Yeah, they had pretty much on the same level many years, then it started to increasing. So almost like 8 times increase based on previous 5 years. So that is actually huge, and I think that could affect on this drop. So they made more shares out, they got the cash, and they put it on the debt. That is good for the company, but not so good for the investors because the stock price could drop significantly, as it turns out here. And yeah, balance sheet looking currently green. They're not paying dividends, and ownership, so transactions, no insider transactions. Ownership breakdown, general public holding mostly 66.6%, insiders holding 18, private companies 10, institutions less than 5%. Top shareholders, so we see here that some of the individuals have been adding the stock for. There's one company decreasing, and yeah, there's one that increased, but I don't see, for example, BlackRock or Vanguard, but Goldman Sachs is here. Anyway, the valuation side, TipRanks does not have any price target, and yeah, the Market Watch has huge price target, but I think there's a lot of risks. But the volumes are getting high once again since the January. So it was last week 2 million, 1 million, and currently 26 million. So somebody is loading at this level. So that is one of the maybe positive side, will be affecting on the price, because this is actually could mean something. And usually it's recommended to buy within high volumes, and yeah, total sales are decreasing each year. And investing.com summing the stock for long-term investors as a buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.